Well, for more on changes at Fairfax, I'm joined by analyst at City Index, Peter Esho. Peter, thank you very much for joining us today.
Thanks for having me.
Well, now this is no real surprise. Back in February, the Chief Executive, Greg Hywood, flagged cost cuts of around $170 million. Will today's developments actually go so far as to achieving what he set out to do?
I think since then, since that announcement, there's also been a large change in shareholding. Gina Rinehart obviously creeping up in terms of shareholding, seeking a position on the board. That's caused more pressure on the board to respond to the share price fall, and we're seeing perhaps strategies being brought forward, such as consolidating the printing operations, which are largely legacy operations, unfortunately forcing large job losses. But this is perhaps an increase in intensity to get the business to where it should be in the future.
So do you think Mrs. Rinehart's attempts to get a seat on the board have added to pressure on the Fairfax board to actually, I suppose, appease investors and make the company more profitable?
Yeah, absolutely. The pressure is now definitely on the board. The share price has been very disappointing, as you said, for shareholders over a long period of time. There's been a lot of question marks over the value in Fairfax, and now, their response is starting to emerge. However, I don't think what's been announced today is enough to appease the concerns from Gina Rinehart and other large institutional shareholders that want the board to be a bit more proactive.
Well, will it be a game changer in the battle between Gina Rinehart and the Fairfax board?
Absolutely not. I still think, skin in the game has been an argument used by the Rinehart camp and other shareholders. One of the main criticisms is that the Fairfax board, the chairman, for example, don't have anywhere near as much ownership in the business as other investors, and so therefore those with a large holding should be able to participate in the board. I don't think that conversation or that argument is about to go away anytime soon.
Okay, well, looking at the broad changes announced today, are the moves too little too late? I mean, many analysts have argued that Fairfax has been too slow to adapt to technological changes. Do you agree?
I agree. I think this is perhaps a decision which should have been taken a little while back, even though, again, it's very unfortunate to see large job losses. The business has been seeing a reduction in traditional advertising revenue. That's not improving. The rate of decline actually continues to increase. They need to do something fast, and they need to find better ways to monetize their digital assets. One of the first things you do before that is to consolidate costs where you're not going to get returns, and I think that's why you're seeing big printing presses being closed and the format actually being shrunk.
All right, Peter Esho, thank you very much for your time. We will leave it there.
Thank you.